he's got to do a quarter of a point because it's so much expected. I actually think he's got to give indication that there's a further quarter of a point drop in rates on a going forward basis as more of an insurance measure against what's likely a continuing weakening backdrop on a global basis. And I think that's what he's got to contend with. You've got German bunds now with a negative 30 basis point yield. I mean, everything is relative from an interest rate standpoint. The United States still looks like a high-yield bond by comparison to what we have in global rates.
And speaking of global rates and the rest of the world, slowing economic growth tends to be something that not only are our markets focused on, but so is the Federal Reserve. And they're really paying attention to what's going on in the global economy, which seems a bit worse off than what we're dealing with here in the United States. How much is that informing Chairman Powell's Fed policy decision-making at this point?
I think it's very significant. We also have to look at the dollar relative to other currencies around the world, too. That's also going to be something that investors should be focused on as well. I think there's going to be an attempt on the Fed's part to somewhat cool the dollar down a little bit relative to other currencies, because that will be very important to stimulating and keeping growth prospects looking positive in the United States.
And that's important, of course, for what's going on with trade as well.
That's right. That's exactly right, because we're in this period right now where the trade uncertainties are just weighing so heavily on global economies. So far, the United States has escaped some of that weakness, but we're coming into the period of the earnings confessional right now. We haven't really started it yet. We're starting to see the pre-announcements. That's going to be really critical, not just what earnings are, but what CEOs say about the future.
And so while we're in this holding pattern for earnings, and of course we don't know exactly what the Fed chairman is going to say today, but we have a pretty good idea of what we think the market expects, what would you be advising your clients to do with their market positioning?
You can't let the short term cloud a longer term strategy. We're going to get through this period of time. I do believe there's a trade deal down the road. It's taken longer than what I would have expected and what most people would have expected. But so far, the U.S. has remained a beacon of strength in an otherwise worsening global growth situation. So from the standpoint of strategies vis-a-vis trade, we still seem to be and still have somewhat the upper hand.
And so if there is a trade deal, I would assume the market in general, overall, will go higher, but there could be certain sectors that would benefit more than others.
Yes.
Any suggestions there for how investors should be looking at that?
We still see a lot of value in areas like financials. I mean, you would think that that would, if we do get a brightening picture on a global growth standpoint, financials should have a pretty good ride. We should see a steepening yield curve. And clearly industrials, those stocks, the economic sensitive names should also do quite well in that kind of an environment, particularly if you lift the haze over the global growth picture.